I also think the meme coins, do they pass the Howey test? Like literally no one has an expectation of profit.
Well, none of the money is going into the development of anything.
Like, yeah, there's no like
true.
shared fees.
Yeah.
Like nothing is getting built, period.
Not a dividend.
It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Alec.eth is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Robert, the crypto connoisseur and czar of Superstate.
GM, everybody.
Then we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Aloha.
And I'm Haseeb, the head hype man at Dragonfly. So we are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So boys, we took a week off and turned out we took the worst week to take off possible.
Best
because Bitcoin, well, for us, best week, but for I think the listeners, they probably want to hear from our reactions to Bitcoin kissing all-time highs. Now, interestingly, so Bitcoin, it basically went right up to 69K and then retreated. I think right now, as we're recording, it's like 67.5, somewhere in that ballpark. There was a great article in CoinDesk that pointed out how in most currencies, Bitcoin has already surpassed all-time highs because the dollar has been very strong relative to most currencies. So in Korea, in India, in Europe, Bitcoin's already surpassed all-time highs. But in dollar terms, Bitcoin is slightly below all-time highs, but it has really cemented Bitcoin mania at this point. Bitcoin has pulled ahead of almost everything, except for, of course, meme coins, which are going nuts, which we'll also talk about. How does it feel now emerging on the other side of what was, people were calling it a bear market for really quite late. Now I'm hearing people say it's starting to be a bull market. I'm like, dude, it's full on bull market. How do you guys feel and what are you observing?
Well, I can't speak for everybody, but speaking for myself and for a lot of crypto Twitter, I don't think it feels like prior bull markets yet, in that this is like the quietest all-time high bull market rally we've had probably in crypto history. The last couple of times we set all-time highs, there was a lot more mania, there was a lot more retail. This was a slow burn up pretty much the whole way.
I don't know if that's true. We had the biggest monthly candle in Bitcoin history. It went up 20K in February.
Yes, but that's a notional increase. And, versus prior markets, it's the equivalent of like, 4 or 5K.
Yeah, I think when you look at sort of the traditional like mania metrics, like, Coinbase ranking on the App Store, and also just like friends texting you, it does feel very muted. And I think we're going to talk about ETH Denver later, but ETH Denver also felt that way. Like 2022 ETH Denver, like immediately post-COVID was mania. Like downtown Denver was fucking packed. Like Diplo was flying in. It was like, this is too much. This ETH Denver, it was still big, but it felt a lot more subdued, which overall was a lot nicer. So
yeah,
it did have one celebrity.
Who are you thinking
Dua
of?
Lipa.
Oh yeah.
Yeah, I agree with that. My signal from the people messaging me is it's still like people I know in normal trading or in tech being like, hey, like, is this real? The last time I got messages like that was when Balaji did the like, it will go to 100K thing, whatever. Because I think that was just like so egregious.
Yeah.
But I guess it feels like the ETF is the cause. Although the interesting thing to me that a funny statistic I think about is like the total amount of inflows from the ETF is roughly the same as the total TVL of Eigenlayer, which is crazy. 10 billion.
I thought 10 billion was just BlackRock.
It is.
Yeah, I think 10 billion is just BlackRock. I think the full ETF complex.
But
I
think the net inflows is like 8 if you take.
Yeah, you have to take out the grayscale.
Oh, I see. If you're subtracting grayscale.
The total. Yeah, sorry, I was just looking at a chart of like the total cumulative.
Got it.
And it. Come on, you have to admit that is a crazy statistic.
Yes, but
as an obvious disclosure Eigenlayer investor supporter or whatever, I still think that to me is the biggest statistic.
Well, but with the ETFs, that's a net inflow of new capital purchasing the asset. Whereas with Eigenlayer, it's taking an asset that's already owned and simply staking it And it's not
But
necessarily
locking it up for a long time.
No, EigenLayer's not locking it up for really any amount of time. You can withdraw from EigenLayer.
No, but I mean, like in your point distribution, all of the reward mechanisms are.
If you want to maximize your points, it's a long time.
Yeah, but
That's what
it's not a net flow of capital.
Yeah. I still, it's just
They're
it's-
both
let the man
it's
chill.
still
Let the man chill.
It's still interesting to think about, like the net inflow of new capital and the size of this new thing are the same, which is to me wild.
Yeah, they're both super impressive.
Yeah. I think I hear what you guys are saying about the mutedness. That being said, I think it's like we have to remember that all this is happening with interest rates at 5.5%, right?
Yeah.
The last time Bitcoin was at this price, interest rates were at 25 basis points, which on a risk adjusted basis makes Bitcoin much more valuable than it was at that time. That being said, there's also been a lot of inflation since then. So technically, like, it would be
What would Balaji be saying?
I know, that's right.
Yeah, a long way to
Yeah,
go.
it's like
Yeah.
77
No,
By the way,
fair enough, fair
another
enough.
reason I think it's muted is one that maybe is not visible to the West, which is like all the money that left the Chinese stock market. Where do you think some of it had to go into crypto?
For sure.
There's no like that deflation of that index. Like, yes, there was like at least 30-40% those foreign money that was leaving the Chinese equities instruments. But like you gotta expect that the majority of that like capital outflow had to have gone.
You're talking about the foreign capital outflow or the domestic.
Even the
capital outflow.
domestic capital outflow.
I don't think the
China.
domestic capital outflow is explaining what's happening in crypto. Like, I mean, one,
I don't know how to
enormous
measure
wealth
it
destruction.
well. That's the problem.
There's been enormous wealth destruction in China over the last like year. So that's for sure. And also the discretionary, like, the discretionary income in China is super low right now. Youth unemployment is super high. They have a lot of problems domestically. The other thing too, you can see when prices are moving, and prices are moving the most during Wall Street hours. So basically 9 a.m. to 4 p.m. Eastern time is when crypto prices are moving.
But I
and
don't think
Asia
in the last
is
little
relatively
run up.
muted.
I mean, like until December, there was like the Solana December era run up. That had a lot of the like perfectly anti-correlated to like the Chinese stock index for like a month
The
straight.
pre-ETF.
The pre
Yeah, I think the pre-ETF probably more so.
felt
More
like
so
there was
with-
like a
yeah.
lot of like
But
money.
right now, it's very clear. Everybody you talk to says that U.S. flows are driving everything.
Right. Coinbase prices on Bitcoin is like $200-$300 ahead of Binance and international prices. Like there is.
Is that right? I didn't realize that.
It's the last
Wow.
couple of days it's been a huge discrepancy.
Holy crap.
And that's indicative of the flows.
Yeah. So it does feel like right now, I think the interesting thing is that the mania is being driven more, if you can call it a mania, it's being driven more by institutions than by retail, right? Retail is engaged. So I also like tracking the where Coinbase is on the App Store. I think as of a week ago, it was below the top 100. Now it's within the top 50 on the App Store. So it's climbing. It's climbing. It's making progress. And of course, Coinbase has been down a couple times within the last week, which is also kind of a bull market sign of like, hey, things are falling over again. It hasn't happened on any of the other exchanges. So Binance hasn't fallen over. OKX hasn't fallen over, which is also a sign. Again, this is a US driven thing.
Well, yes, but Coinbase has always had more site reliability issues than
True.
the other exchanges.
Granted.
Historically in other bull markets, Coinbase was, having site degradation every day in some cases.
Right. Yeah. So they say they're working on it, but we'll see. Maybe that's one of the things to watch in this cycle.
Yeah. Once Coinbase hits top 10, that's when you have your exit signal. And that's when you
Not financial advice.
not financial.
Not financial advice.
Well, it
obviously.
kind of is.
Yeah. He's giving financial
Yeah.
advice. We're not giving financial advice. Yeah. I mean, if you remember in 2021 and in 2022, Coinbase was the number one finance app on the App Store basically continuously for the entire year. And on certain days, it was number one across the entire App Store. Literally
that's
more
a
downloads
very
than
stupid
Facebook, than
question,
TikTok.
Having never looked at this, what is the top 5 right now? Like
On the App Store
I bet
for
it's
finance?
TikTok.
Well,
So like
in the
total,
finance
in finance, number one is Cash App. Number two is
Venmo,
Yeah, it's like Venmo, Zelle, like Chime.
Robinhood.
Robinhood is pretty low. Robinhood is like slightly above Coinbase.
Okay,
So yeah, it's mostly like pay people type apps. So that was all that stuff got pushed down by Coinbase in the 21 cycle. So that I think is a sign that you're getting to a full on retail mania. But the other thing is just the qualitative thing where everybody at a party is talking about tokens, like a non-crypto party.
has that happened
or like
to you?
not
Oh,
yet.
I mean, but it definitely happened in the bull market, right? Or like
Yeah.
you get in an Uber and the Uber driver is giving you token tips.
Oh, yeah.
That kind of thing.
Well, the
is
funny
like
thing is
bull
that
market.
I've seen more of.
Well, in Denver,
I've
in
been-
Denver, it
not just
doesn't
Denver,
count.
not just Denver,
Denver
even
doesn't
in
count.
New York. I feel like I see
You're getting that?
Denver's having like the price chart open multiple times in the last 2 or 3 weeks.
Okay,
And
interesting.
What are they
so
trading?
ETH and WIF.
Really?
Oh, really? Whiff.
Because
Okay.
the last bull market at like the very top, my neighbors were asking me about Doge. And
Well, she like flipped AVAX today, which was
Yeah.
crazy. It's like
Yeah,
17 billion FTV.
super volatile. It's
Something
like
like that.
shooting
Yeah,
up and
crazy
down like 20-30% a day. So okay, and there's the question of, are we in a bull market? If so, what stage of the bull market we're in?
Yes.
Fine. How does it feel as investors to be back here so soon? Because I think most of us were
happy
not
we
guessing.
invested a lot when everyone was like crypto sucks. That's
Yeah.
all I got to say.
Yeah.
Yeah, I think prices have kind of been creeping up. Obviously, people comp privates to publics, but it doesn't feel as frothy as 2021 when every normie VC, every random person who cuts angel checks is hitting you up for allocation or sending you deals. Those people still feel very sidelined, and so similarly, it's like
We're in April 2021 if we go by my following metric, which is when I start getting like traditional VC analysts following me on Twitter, and I start seeing like XXX at whatever just graduated the like YYY finance club, and I'm like, okay, so like they're like the ones who are early who have to present to their IC to like
Yeah.
make, and like you can see that happening again.
Okay.
I mean, I think in the private markets, valuations are not going up as fast as they did in prior bull markets.
Wait.
Right, like
Right now is crazy.
I don't think it's crazy yet. I think it's going to get crazy within a couple months.
Yeah, do you remember at the top of the last bull market, someone with an idea would walk into a room and be like, I need a $300 million valuation, and was taken seriously?
I think we're getting close to that.
Where are you
No.
seeing that? Where are you seeing that?
I feel like a lot of the copy pasta infrastructure stuff of like X already exists and is live, and like here's we want to be number 2.
Yeah.
The number 2 with no code, and like, okay, maybe some pedigree is raising at like 10% of the the public comp. I think the public comps being so crazy,
Yeah.
the public and private have this leading and lagging cycle thing, right? Obviously, but you're seeing the private comps like make a big jump, because like until the end of last year they were still super low, and I think the catch up happened in January, and now it's like,
I think what I'd say is I'm seeing like the A's and B's really creep up, but the seeds are actually not that crazy yet.
well, there's no real growth stage companies that are raising right now.
I mean, there are plenty of plays that are trying to raise like 30, 40 million.
But I mean, like, like have like kind of survived the last cycle, right? Like, how many people are?
survived the last time? No, I'm talking about mostly greenfield projects that haven't.
I
launched
think
yet.
the thing you're seeing that's interesting, that I don't know if a lot of listeners kind of know, the dynamics of crypto companies has changed a lot. It's like very different than the traditional venture. Like, I raise a seed round, I meet some milestones, I raise an A, I meet some milestones, I raise a B. It's sort of this thing where like, it's like I raise a seed, maybe I raise an A, and I launch the network, I have a token generation event, and then the B or C is like a treasury sale.
Right.
And those treasury sales, I think, are like very differently priced than like a B or C. And I think that's why you're kind of seeing this market move differently than it did last cycle. I don't think there were as many like large like there was like Solana and stuff like that, but now you see much smaller projects doing treasury sales, and I feel like that's sort of like a difference qualitatively also. I'm not sure if that's a sign of like we haven't hit mania, but like, yeah, it's some capital market structure change that seems relevant.
Well, there's also alts have really lagged this market. Like a lot of them are, multiples from their lows, but they're still, a good chunk off their all-time highs. And so, there is some re-rating, but it's not as, pure euphoria as 2021 in that way. Where again, looking at comps, it's like, they're not hitting all-time high like Bitcoin.
It's true. The memes aren't as violent as the 2021 memes. There's no "have fun staying poor" or whatever memes.
I think we're getting there. I do feel like we're getting
there.
there.
Really?
Like,
Have you seen any kind of like overly aggressive memes?
I mean, it depends on what you mean by overly aggressive. Like there is definitely a lot of dancing in the streets and sort of like, I think especially in the meme coin space, I feel like that's where it's the most exaggerated, I think. With Bitcoin, like Bitcoin is, I don't know, at this point, like what is there to say? Yeah, Bitcoin is going to win. It's going to keep winning.
Yeah.
But I feel like, I mean, even like the Ether people or like, I don't know, the bankless guys, they're like super aggro and getting out there and getting into fights. So, you know, Mert is constantly subtweeting people.
No, but he seems to be giving out olive branches because now his tweets are all like praising non-Solana things.
That's true. That's true. I mean, maybe he's found a different strategy in the bull market that works better. You know, we all win together. But to your point, Tom, just for a sense of scale right now. So Bitcoin, very close to all-time highs, basically a few percent off all-time highs. Ethereum is down about 30% from all-time high.
I feel like it's less than that. I mean,
is it
it's
gone-
huge rally the last couple
Is it
days.
20? 20% off?
It was what, 4,600 or so
I mean,
was the all-time high?
Yeah, I think it's
3,800
42.
right
I
now.
think it's like 10%, 10, 20%, something like that.
It's close.
No, more than that.
No, it's
No,
getting
it's
high.
4,600. It's at 38.
No, I thought it was like 45.
Yeah. Okay, well, that's more like
Okay, so it's like 20%. 20% off all-time high.
At this rate, it's like 3 days away.
Guys, you're
Okay,
giving
potentially.
this type of estimation. You're giving credence to all of the people who are like crypto's astrology for me.
Well, the thing is, I don't actually know what the all-time high
don't
is
have
for
the data
Ether.
at our
I know,
Somewhere
I know,
between
I
4
know.
to 5K. Okay,
I know, but
but for the
watch
alts,
it's a 4,500 vibe. How about that?
yeah, exactly.
Yeah.
But the point is that for alts,
Rising
okay, so
4,500,
This is a
Saturn
big question
Saturn
between not
4,200.
okay, let me finish this point. Bitcoin is a few percent off all-time high. Ether about 20% off. Most of the alts, especially the alt L1s, are down somewhere between 60 to 80% from all-time highs. So
Yeah, Solana's
you see
like 50%.
big spreads. Yeah,
Solana's
Solana.
like, Solana has to be leading 50%. Near is
Yeah.
like also 40%.
Near
They
is
had-
probably 70% from all-time high.
no, it jumped a lot today. It's up 50.
Oh, yeah. It's
Yeah,
like,
at
near-
5. But a tie was 20.
Oh, high was
So it's
20. I
down
thought it was
75
like
from
60.
all-time
Okay.
high. Yeah, so a little bit under 70. But I think it's
20?
characteristic of most
Wait,
of
it
them.
was 20. I didn't realize.
That was the top. That was the top for
I
near. Yeah.
didn't realize.
disclosure, we're investors in there.
Yeah.
Yeah,
as
I
are
think
we.
everyone is.
Yeah, that's right. So most of the alts are quite a bit down from all-time highs. But also, I mean, again, interest rates haven't been cut yet. And I suspect
Yeah.
that the spread between the all-time highs for Bitcoin and the alts is going to be really tied to risk appetite. And on an absolute scale, risk appetite.
Well, I
you'll be
guess
pretty
I guess what you're also claiming here though is that a lot of like new capital has no leverage in it versus like,
that is also true.
which is probably why it's also less manic.
Right. And it's coming in through Bitcoin, right? And so
Yeah.
it
I
takes
think-
some time for that.
You're right that I think the majority of the net inflow has been through the ETFs, which is like not leveraged. But if you look at like futures open interest, futures funding
Yeah,
rates,
yeah.
I mean, there was like 100% APR like on Monday.
Funding rates on foreign exchanges are insane.
Yeah.
Yeah.
So I don't know. There's like still
Well, I just mean there's not like people like I remember in
there's
the
no GPTC trade this time.
yeah. Well, I also just remember in the pure exuberant retail mania of 2021, just like people posting things on Reddit like I just took out a home equity loan and put it all in Bitcoin. like I don't see
That
any.
is true.
You know what
That
I
is
mean?
true.
I don't
That's
see
not
any
here
of
yet.
that
That's
type
not
of
here yet.
stuff.
Maybe they took it out on Figure, the blockchain.
There you go. Provenance block.
Provenance.
Yes.
Provenance the blockchain. It's funny because it does feel like right now everyone agrees Bitcoin's going to go up.
Yep.
Like there's nobody I can find
Which
who's
is
like,
a little
well,
scary.
right, exactly. But it is also
I guess the
fulfilling
big
prophecy.
event hasn't happened yet. So
the big event being,
happening.
is that the big event?
I don't know if it's that big of an event.
I don't think
So
it's a big event.
here's why it doesn't really matter.
Well, I'm just saying it's a big event on the calendar. Right?
It is a big
You're-
event on the calendar insofar
Yeah.
as there's not a lot of things on the calendar.
I mean, the shocking event in my mind that's driving all of this is just seeing the magnitude of the ETF flows. The ETF flows at this point are 10x the newly mined Bitcoin. Even after the halvening, if nothing changes, that goes from 10x to 20x, but it's still, because of the ETF flows, 10x daily issuance. Bitcoin always had this daily overhang where there had to be buying demand that exceeded its issuance for it to stay flat, right? It's like walking on a treadmill. Ether, different story, but we're already at the point where the ETF flows are so meaningful that the halvening looks unimportant. So
You think a ETF underwriter will buy a miner, like a ETF issuer?
no.
Because I could see that being like a competitive edge for them if they have.
Why?
Well, because like they now don't have to like net out and give market makers huge incentives daily to like find inventory for them.
Oh,
Yeah, but the
I've, like, kind of
slippage on that
wondered-
is like small enough.
I don't know. I'm just saying like I could imagine in some state of the world that it actually makes sense.
Yeah,
Total M&A speculation.
yeah. No, that sounds a little too
crazy.
Yeah, it sounds too many steps ahead. Also, like I think that there's all this weird reg risk with holding a miner, like all the EPA stuff that.
Well,
is going
okay,
on.
then explain the diversified income Grayscale trust.
Right. So Grayscale is launching a product that basically has a bunch of assets that you can stake. So they generate staking income. And so people are excited. I think it's like Solana, Aptos, Near, what else is in there?
Osmo.
Osmo.
Really?
Yeah.
No kidding. Yeah. So a bunch of stakeable tokens, and people got very excited about this as being, hey, maybe this is someday coming to an ETF near you. Obviously, these are way farther down on the list of assets that are probably in line to get ETF'd. So we still got to fight the Ether battle in the summer. I think May 31st is the big date for whether or not the Ether ETF will be approved. And then I suspect what happens is, so right now I think Polymarket is pricing it at roughly 50-50, whether the Ether ETF gets approved by May 31st. If it doesn't get approved, almost certainly lawsuit time, people are going to sue the SEC. And I think at this point, most people expect the SEC will, it's more or less the same argument as Bitcoin. So the SEC will probably lose that case, but it takes, whatever, 4 months, 6 months.
I mean, longer. How long was Grayscale's case?
I thought it felt like it was pretty quick, wasn't it?
Don't remember.
I thought like a year.
I think this is a good point, which is it's not like the SEC has changed their mind on crypto and is now super eager to approve ETFs.
Right.
If they are dragged kicking and screaming, they will approve an ETF, but it's not like they're really gung-ho about approving this ETF.
Yeah. I mean, my suspicion though is that the situation has materially changed since the Bitcoin ETF, right? So like you said, this is the biggest product in ETF history. So like the SEC ultimately, I mean, people who work at the SEC, they want jobs after they get kicked out if there's turnover in the administration, right? And so if you are the enemy to like the biggest product in the history of ETFs, it's just like, okay, well, great. Nobody will ever hire you. You're an asshole. Fuck you. So I think the other thing they realize is that, look, we were worried about the bad things happening. No bad things have happened, right? It has been smooth sailing. It has been totally wonderful. And so to the extent you were worried about market manipulation or whatever boogeyman they were claiming, no, like the CME also trades Ether. Whatever happened to Bitcoin should also happen to Ether. And so it seems like I would think it's more likely, especially given that, the same players are at the table of BlackRock and Fidelity and so on, that if that was the sign that like, hey, the Bitcoin ETF is going to get approved, it seems to me like the same should be true of the Ether ETF. But if they get sued, I mean, it might take another 4 or 6 months.
Like nothing.
That's too rational of an argument.
Maybe so, but I have to think that the fact the ETF has gone this well does change things for the SEC, right? I mean, if something went badly, you would think, okay, the percentage should go down. So things went great. That should mean the percentage goes up. I would think anyway. I mean, obviously I'm not a soothsayer for the SEC, but I think what happens is that Ether's first in line. Once you get Ether in, then you probably get Litecoin, XRP, right? Things that already have, more or less either XRP's case, they won at least the preliminary case before there's an appeal. And then for Litecoin, nobody gives a shit. Litecoin trades enough that it's definitely not a security. And then you go to, okay, Solana, and then Solana's a fight because they have claimed affirmatively that Solana is a security. Whereas they've never claimed that Ether is security. They've just, never said anything about it. So I think that's probably how it goes. And if the Solana fight happens, then, you get next in line. And so you get AVAX and Near and blah, blah, blah. Or, they're probably 7th, 8th in line.
For what it's worth, Polymarket does have a Doge ETF approval market that's sitting at 10% this year. So
for
we'll
year
see.
end?
Yeah.
I think that is an easy sell.
Well, not financial advice.
Yeah.
Not financial advice.
Yeah. Interesting. Okay. So this has also been the season, not just of Bitcoin, but of meme coins. So we alluded a little bit to, I think Shiba flipped AVAX, every single meme coin. There's WIF, there's Doge, there's Shiba, there's a bunch of new ones.
Pepe,
There's
Jeo
Bonk.
Boden.
Okay. So tell me about, what is it? Jeo Boden?
Yeah.
Okay. Explain to me the story of Jeo Boden, because I have not been following this.
I don't even know the story of Jeo Boden that well. I don't own it. I wish I did at this point.
Okay. Is anyone able to recount the story for our audience of Jeo Boden?
I don't know if I have the story.
I don't know the story.
I think, it's like a lot of these meme coins. I think it's a Solana meme coin. It was deployed 72 hours ago.
It has like a Wojak Biden meme.
Yeah. There's like but it's not like a pure Wojak.
No, it's like a weird
demented Wojaks. So they got that going for it, but it makes sense. It's sort of the counterplace, the hedge to the Trump MAGA token, which has also been ripping. And so, it's an efficient market is forming around these.
But the Trump one wasn't like a demented Wojak one.
No,
the Trump one was meant to be like a serious trying to ride his coattails into meme coin frenzy.
Yeah.
And like almost like a credible meme coin. Jeo Boden is not only like a demented Wojak meme coin.
There was also a copy of Jeo Boden within like an hour
Yeah,
of like
course
with
there
Brian Armstrong's misspelled.
No, like,
And
like
it
there's
was
a whole cast of misspelling every crypto celebrity type thing.
Huh.
Meme coins out there.
So
Jeo
where's your
Boden
meme
has
coin?
taken off.
Where's your meme coin?
I don't have one. Please don't make one. Don't make a Tarun one. Bad news. But there was a Joe Biden meme coin that followed the Trump meme coin, and it was not as successful. There was obviously a lot of people speculating on it because
I
of
just now realized that Jeo Boden was a misspelling of
Joe Biden.
Okay, that didn't click
Right.
until you said
Oh,
that.
you had
So-
to see the meme.
Okay.
Yeah,
All right.
They're like really demented. But Joe Biden was not as successful as Trump.
Right.
And so at some points people start just gambling with just completely broken memes, and Jeo Boden caught on, in my opinion, because someone tweeted out oh, look at my friend's portfolio, is he gonna make it? And it was all of these demented Wojak meme coins. It was a $600 portfolio.
All right. I love how you're I know nothing about this. The history of provenance of this. Insert provenance of this.
Yeah. No, this is striking how much detail you have.
So this obviously went viral. I mean, I saw multiple, chat rooms where people are passing around this tweet, laughing at it hysterically. And all of a sudden, Jeo Boden started its rally.
Jeo Boden. Okay.
Yeah.
Yeah. So,
But it's not the only meme coin.
of course.
No,
Yeah,
I mean,
there's
all
a
of the
huge-
meme coins
Yeah,
have
there's
had-
a huge array. It's funny. There was somebody from Delphi who was telling me that I think I tweeted something about the poly market prediction markets on the presidency, and he was like, "Yeah, I mean, poly markets for suckers. You should just buy Trump coin. Poly market you can only get a 2x on poly market. On Trump coin, you get 100x. Who knows?
And you can get leverage. I'm sure there's a lending
And you
market
can
out
get
there
leverage.
that takes Trump coin as collateral.
Yeah, obviously. So there is, and the problem is that I agreed with him. It's you were absolutely right. It's only worth 400 million today.
Trump
sky's the
trading
limit.
card NFTs have also been creeping up.
Is that right?
Yeah, very slowly though.
I still
Okay.
own one.
well,
I have to
congrats.
check
There's
prices.
too much
I haven't
supply.
done that
Yeah,
in
that's the
years.
problem. There's too much supply. Yeah, so there is a, I guess, connected philosophy that people have been talking about, which is called financial nihilism. And financial nihilism is this idea that basically claims that when people lose any sense of connection between financial markets and real world outcomes, they start to think that actually this idea that financial assets should be priced based on their intrinsic value is bullshit. Everything is in the eye of the beholder. And therefore, it's kind of the Wall Street bets view of the world is whatever, you hedge funds are playing this stupid, old, boring, staid game. If we don't play that game, then financial markets are just a different thing. And so it is with Jeo Boden. We all decide Jeo Boden's hilarious. And so it, ends up going up whatever kajillion %. How much do you think that's going to define this rally or this stage of crypto?
Well, I thought it was funny. I was reading a post by a renowned crypto hater. Hater might be the wrong word. Just someone who I feel has disliked it for a long time, but then every once in a while will change his mind a little bit and then go back to disliking it.
Who's this?
Just Joe Weisenthal from Bloomberg.
Mm-hmm.
I don't think he's a hater.
No, he's not a hater.
He's not a hater.
He's a cautious appreciator.
He's a realist troll. Yeah, he asks real questions.
It's true.
Yeah. He's like the TradFi Gwart.
Yeah, more of a Bitcoin maxi, but yeah. I'm that's why I was hesitant to say hater. It's just
Okay,
something. It's but there is a little bit of over skepticism of the technology side, which whatever. Everyone has their own preferences.
Yeah.
But he was I love this financial nihilism. He wrote some posts. It's first time that this industry has been real about what it is. And he has this long blog. Was it a blog post or was it just a thread? But yeah, he's a long post about this. So
Yeah.
I feel there is some interesting thing to that.
I think there is something to it. I mean, it's especially with NFTs, it's just sort of the deconstruction of this idea of
Well, I also think the meme coins, do they pass the Howey test? Literally no one has an expectation of profit.
Well, none of the money is going into the development of anything.
Yeah, there's no
That's true.
shared fees.
Yeah.
Nothing is getting built, period. You're not there is no reliance.
Well, but there was wasn't there some Doge metaverse or something?
Shib made a L2.
Yeah. I think it's AMM.
Oh yeah. And Dogecoin was talking about doing some bridge or something, weren't they?
Mhm.
There are Doginals, and there is a ordinals ecosystem on Doge. So
Okay.
you got that going for you.
Yeah. Yeah. So I mean, Dogecoin has devs, right? So like, I mean, for some of these meme coins more than others, I think it.
Yeah, we also haven't
spectrum.
seen the can devs do something memes yet, like the equivalent. For
That
this.
Yeah.
the price goes down.
Yeah, right. But that's like, you know, you start to see that. That's when you know, like, you're getting close to the
Right.
precipice.
But I think we've seen this total disconnect, right? In the last market, it was like, oh, the devs need to like create a metaverse. And now it's like, please don't do anything. Just like let it be a meme. The more that you try to accrete technology onto it, the more people will actually try to understand what its value is.
Right. Because of the financial nihilism of just like,
Exactly.
you know,
I guess the astrology thing is. is a
I mean, it
form
also
of
speaks to AI tokens, right? Like the more
I mean, it
legible
speaks to
the AI token, like
AI
the project
companies
is.
in
Yeah.
general.
Well, I mean, that is arguable. I think on AI tokens, I think it's pretty clear that the less clear what you're building is, the higher evaluation the market can ascribe to it.
Although arguably, BitTensor is despite it doing something more or less not useful, it does work, and you can run a validator and a miner,
Is that right?
which is a lot of steps ahead of most AI coins.
so that's bearish.
Well, I'm just saying no, but they're the highest market cap AI coin.
Yeah.
basically.
Yeah, you can do inference on it. Like, you know, it does some
It
stuff.
literally
Yeah.
has a transaction type for taking a gradient step. Let me tell you how inefficient that is.
Yeah, it technically works.
It like but it's like 10 to the 9 times slower than like every. It's like kind of idiotic. It's like almost like, why would I run a neural net on Solana or Ethereum? But
Yeah.
like at the same time, like it does actually exist.
It does exist.
Unlike
It does
But
unlike
that's a bad thing. Like the fact that you can discuss credibly like how bad the efficiency is of actually using it is worse.
but that's
than
why
it not
it's
existing at
the
all.
largest cap
Huge
coin
mistake.
though. It was first.
Yeah.
Yeah.
Being first was what mattered.
Yeah, but you can objectively prove that it's pointless, like looking at the specifications of it.
Or just like looking at their block explorer.
Yeah,
I,
there's
like,
like no
look at the- I
usage.
look
There's
at the
like no
explorer.
usage.
I'm like, oh my
Yeah.
god, this is like very useless.
Yeah. It's kind
It's
of
like
good.
my Face ID chip on my phone is more efficient in the 6 seconds than like, you know, the entire blockchain.
Well, anything, you know, in terms of computing, anything that's distributed has this like
for
tough
sure.
pill to
But
Yes.
but I feel like the AI stuff is like kind of funny because everyone who goes into it is coming from like AI land and like has no appreciation of like adversarial networks means you have to slow down bandwidth, latency, whatever. And then they like try to build something like, oh shit, we can't do it, but like we need the token. So I guess we're gonna like
I think it's the other way around. I think most of the people building in crypto AI are not AI people. I think it's mostly crypto people.
no. I think some of them they hire people who are transplants.
Sure.
Like they raise money, then they hire people who work in it.
yeah.
And then those people are like, oh, we're just going to like bolt on all this shit and like run it centralized. And then they're like, oh shit, we can't actually do this
Yeah.
decentralized. And then you get kind of either Rube Goldberg machine, like some of them, which are not live. And you
Yeah.
know, honestly, you read their docs, you're like, I think this is a Findy scam. And then you have the other ones who are like, BitTensor, where they've been around for a while too, right?
Yeah, they have.
And they actually did essentially do something. It's just not something
It's not,
like
very, it's not very useful.
but they became the meme coin first.
Yes,
because
they
of
did.
that,
They did.
because they tried.
Well, okay, so let's do a little
The
deep dive on
participation
crypto
of-
AI because I think it's very timely because it's one of the things besides Bitcoin and meme coins that is capturing the popular imagination. So with crypto AI, first, have you guys made an investment in crypto AI?
Ritual.
You did Ritual. Okay, are you comfortable talking about Ritual?
Sure.
Okay. So there's a few categories I think that now have kind of reified as the main things within crypto AI. So the first and probably the oldest is GPU marketplaces.
Yeah.
There's just
Render
Airbnb for your
Akash.
GPU. Yeah, Render Akash.
IO.
Back in the day, it was Golem, which
Yeah.
did really purely
Yeah.
rendering, and now it's like GPU jobs. You can just SSH.
Actually, you could argue LivePeer is also in this category.
Kind of, but it's not AI at this point, right? It's
but
transcoding.
arguably it's doing the same hardware aggregation.
Yeah, same core idea, but they get a shittier valuation because no AI.
Yeah, but like, okay, I don't think any like distributed compute / distributed hardware is necessarily AI, right?
Yes, but
Like,
it's
I think
getting
that's a
the
big
AI.
enough-
No, I think
It's riding the
in
wave.
the LivePeer case, it's like they're still buying A100s. You know, they were still hardware. They had the same provisioning.
They're buying A100s for video transcoding.
Well, I think they actually allowed you to do like, remember, think about it this way. When you're taking CUDA and you're compiling it to a new chip, you're going to run faster. And if you're a miner on this thing and like the faster you respond, the faster you get your rewards, you would buy the new chip.
Oh, it's just like a block reward thing.
It's just a
Not
block
even
reward thing. It's not even that they care about the.
I can't imagine that any supply finds the best way to monetize going to LivePeer.
That's
Because I think every single one of these networks is
I
like,
think my point there was just more that like you could run this. You could use the remnant.
You could, yeah.
remnant
But I think
supply.
A100 can just get better rewards elsewhere. I would assume. I'd be surprised if that were not true. Okay, so category number 1 is GPU rental, and that I think is a thing. And like you're seeing Akash is doing okay, you know, Render is doing okay.
Well, I mean, I will say one thing. Well, something we invested in that's a centralized company that does GPU rental is doing much better than any of the
in absolute terms, but not in token price.
all the non-decentralized ones have like way better product market.
What did you guys invest into?
Together?
Oh, Together. Oh, yeah, but that's like, isn't that managed?
But that's what I mean by centralized.
Right, but you don't get the GPU, right? They just run model APIs.
They do, yeah. But like arguably all of the decentralized ones, the APIs they're starting to give people look like that. So like you don't have to know where they're running it.
Oh, I see.
Because like people don't want to know that they have to stake the token and whatever, right?
I see.
They basically are making like a intent looking like RFQ style thing. Right. Like, give me dollars and I'll give you, you know.
Yeah, I'll give you the
But hey, that looks like the ones who are managed.
Right.
Right.
Yeah. So I mean, it's clearly the case that very few people are using these decentralized GPU networks relative to the centralized ones. Almost all the inventory, especially of the high-end chips, are held by, you know, centralized cloud providers.
Also, the networking constraints for executing a lot of these things are like, why would I do it over the internet?
Right. Especially if you need multiple GPUs simultaneously, then you're kind of fucked. So that's category 1 is GPU rental. Category 2 is decentralized inference. So this is, you know, a little bit different. GPU rental is like you get the whole GPU. Decentralized inference is just, you know, I have this model. I want to run this model. I don't want anyone to censor me. I don't want anyone to control me, whether I can use this model. Maybe I have a query that normally would not be allowed on a centralized provider, whatever it is, right? Or I have an anime model and this anime stuff is, you know, trained on unlicensed data that whatever, you insert your use case here. So that is ritual. Ritual is decentralized inference, correct? So talk us through why you're bullish on decentralized inference.
Yeah. So I guess there are a couple things. The first thing is that, you know, I think people kind of want some notion of understanding of on-chain data that is usable by a contract on-chain. And this has kind of been the holy grail for a long time, right? Like everything from the graph of like, I have indexing that's off-chain, but I prove some portion of it on-chain, to the ZK versions like Axiom, where I take previous state and I can prove that like, hey, this was what happened in Ethereum historically, versus having to like index manually and like be a centralized index provider, right? Like the Dunes or Nansons and stuff, which I think you'll always have, right? They're always going to be way faster. And so there's a reason for that. But for some use cases where contracts actually need some either historical queries or models processed on historical queries to make a decision about themselves, you're kind of giving them an ability to look in their past. Right now, if you look at how blockchain state works, either I increase the cost to the user by storing much more historical state, or I'm sort of autonomous in a time one sense. Like I only use the current state. I can't really look backwards. But like in reality, a lot of applications, you know, most applications, you're right, need some notion of historical state.
Yeah.
And I think all of these things are giving you different ways of getting at that. And it's more a question of like, how do you value it? Like how much security do you want for that?
Yeah. So it sounds like what you're describing is that you can create an AI, have it interact in real time on blockchain-based data and basically say, like, oh, looking at this data, basically an on-chain, a gauntlet. Yeah. More or less. Right.
Yeah. I think that in the long run, that's like kind of where you want to go.
So I would actually distinguish that as being verifiable inference rather than decentralized inference.
Sure. I mean, I think the hard part is you have to make sure the verification step can happen, right? And you have two ways of doing that. One is cryptographic. So like ZK going to be very slow. Like right now, that's kind of, you know, I can do a single decision tree. I can do a couple boosted trees. It's not like a real, you can't really do like high capacity stuff.
Yeah.
The second thing is these like economically secured things where multiple people run it and then they come to consensus, and that's more in the.
This is supposedly what BitTensor does, right?
Right,
which is decentralized inference.
Right. But BitTensor seems to be doing, you know, like almost step-by-step verification of the inference versus like an aggregation. So it's just, you know, you look at the blocks and it's filled with like each step of the thing instead of just like, oh, I verified one thing. So I think that the idea is to like really find a way of like figuring out how to batch these things and make it easier. Now, the hard part, I think, for using it for something that's like really high value, like DeFi, is that like you're kind of creating a bunch of MEV, right? People can see exactly what your like in order for the verification to work, the entire thing is open source. So why can't I run it locally and front run your transaction?
Yeah.
You kind of create all this. So we're not still at the point that that's settled. But I think for these lower frequency use cases like the Farcaster social media type of stuff, or like sort of some of the games.
Can't you have like a commitment to the model weights and just say, look, here's a hash of the model, here's what we're running, and like, the nodes don't disclose what the model is?
Well, how do they get the initial set? And how do I verify that commitment? Like you could make something where they're constantly committing and revealing.
Yeah.
But now you're just adding in another handle. It ends up being like kind of basically then multi-sigging it.
Yeah.
So I think we're not quite at the stage. Like I think like once things like EigenLayer are live and you can use that for bootstrapping these networks quickly for these economic rules, like slashing people when they don't reveal, like for instance, then it's a lot easier.
Right.
But I sort of think like the long-term view of the decentralized inference is just like applications that are already decentralized that don't want to use an oracle for historical data. This is a way of doing it.
But
and so,
why the inference part? Like you can easily do verifiable
Just
historical state. Yeah.
I think a lot of it just boils down to like the storage size and amount of data you want to transfer, right? Like what am I using the query for? Like I'm going to pass it into some function on chain and like, okay, well now I'm charging the user gas for that. Why can't I make the off-chain network do that and kind of split the cost with them? I think it comes down to a cost basis thing more than like you could do the inference or the computation from the queries on chain, but now you're just bloating your on-chain contract. So I feel like if you're already outsourcing some of that, then you might as well just outsource the whole thing and only get the answer.
And so the last category is verifiable training, which I think is just batshit crazy.
That is the one where I read the docs and I'm convinced that the people who do it have either never run a cluster and tried to keep it alive and up and done the DevOps. B, they've never actually trained a model on like a realistic size of data. They did the unit tests and like, oh, I trained it on 5 gigabytes of MNIST data. Okay, great. Let's like decentralize this. Like that's not going to get you a model anyone wants to use.
Yeah.
And the third thing is a lot of them were being like, okay, well, like actually we'll give you privacy. And it's like, there's no real none of the privacy stuff is actually made for doing this, and scaling that's extremely hard. And I feel like it's like the worst of both worlds. It's like, it's taking the worst solution for each of these, dumping it together and saying like, here's a token.
Yeah.
It's a junk bond.
Yeah. I think the decentralized training / verifiable training, like it's a solution looking for a problem. Like I've never heard anybody ever tell me like, the big problem in my life is that I need to decentralize training this model.
Right. Training should be centralized. It should be like the most professional and opinionated.
And it's the most expensive part of generating a model, right? Like if you balloon that by even 2x,
right?
And some of these are claiming, only 2x increase in cost for training.
Yeah,
that's a massive upfront.
Like, what's the advantage of?
I'm getting the exact same output.
Yeah, I mean, I think
potentially.
Exactly. The whole point is that you get the same output as training it in a centralized way. I think that the claim they would make is like, well, we can prove what data was actually gone into training this model, and so if you want to prove that like this model didn't use any
didn't use the photos from
customers or whatever.
There's an idea too of like crowdsourcing funding for the model, right? Like, okay, we can actually have a model with weights that are like community owned versus
you can contribute your own data to this model.
I was going to say, what do you think of decentralized data labeling?
I think it's fine. It just feels like
scale.ai.
Yeah, basically decentralized scale AI. Yeah, I mean, I think that's fine. It just feels to me like there's one business that you are displacing, which is like what is scale AI? Like 10 billion?
Yeah, and they've actually kind of pivoted more towards doing like fine tuning. Like if you go to their website now, it's like way less about explicit. Like
they actually run Infrastrcture now themselves.
Really? Right.
Yeah.
Right. So they basically do like RLHF for all the big models, and like that. It's a very different kind of business. It's not something you can easily do decentralized because it's all about quality. And even a small amount of, hey, we kind of downshifted, or we have this like challenged and verifier's dilemma type game. Is going to end up just lowering the quality of the model.
Yeah.
And for how much people invest into training these
I think
models.
another thing people have realized about decentralized training, I remember like exuberance of the bull market, I heard a lot of ideas like, we're just going to like have a full ZK proof of the training, which is ridiculous. But then there were people who were doing like statistical proofs of training, which are like hey, I'm going to challenge you to give me some fraction of your weights. And like, you have to prove to me that like, here's the initial step, here's the end step. And I sample random. And like, you can kind of do these bisection game type of things, but those things are like interactive. How much bandwidth are you going to put on this network, right? Like, I'm not only am I saying like, you have to do all this compute, I'm saying you have to stay up and like, you're extremely DDoSable. It's like all the things you don't want in a training procedure are happening. You're like asking for it.
TrueBit was right. They were just ahead of their time.
Yeah, it's true.
Yeah. So, okay. That was a very brief crypto AI overview. There's one more topic.
What do you guys feel? Are you excited about any?
So I mean, there's been a lot of funding in crypto AI lately. It seems like most of it is either going to decentralized inference or GPU marketplaces. There was just IONET that just announced, I think, $1 billion valuation that they raised a bunch of money at. My view on this is more or less that I think there is stuff that's investable here, but I think decentralized inference and GPU marketplaces, I think GPU marketplaces unequivocally they're a thing. I don't know how big they will be because ultimately they're always going to be playing at a disadvantage relative to the centralized players who just can get the economies of scale. They can get better inventory. They can like route things more efficiently than the decentralized players. Like if you look at Vast AI, like, so when everybody compares like the decentralized marketplaces like Akash and Render to Amazon like is 3 times the cost, but they never put it next to Vast AI, which is like the centralized version of the exact same thing, which always is like 5% cheaper than the decentralized versions. And so my view here is that like, I just don't know. I think where crypto excels is where there's a lot of censorship, is where people don't want you to trade GPUs or do whatever. I don't think there's anybody getting in the way of you wanting to SSHing into somebody's GPU and paying by the hour.
To be fair though, I will say for a lot of the centralized training stuff, a lot of the revenue does come from things that people like OpenAI or Anthropic don't let you do.
Decentralized training?
Or no, even the centralized training that's like fine tuning.
You mean fine tuning like a OpenAI model?
Yeah, like there's a lot of stuff they kind of have restrictions on.
Yeah, for sure.
Like, that's where
but the thing is like almost
coming.
all the spend in AI right now is coming from large companies.
Yeah.
Right. I mean, they're just doing much, much larger training runs than the hobbyists who are creating the waifu models or the, the anime models. There obviously is a long tail of that stuff. And,
right, but
the reality is that, but
when
if you're using Vast AI, some random guy in Russia is renting you his GPU, he doesn't give a shit what you're doing. So I think the reality is that yes, if you're on OpenAI and they see that you're shoveling in like, thousands of frames of Studio Ghibli movies, they're going to be like, yo, what, you obviously don't have the rights to this. But I think most of the places where you can just rent a GPU, even on Amazon, you go rent a GPU, like they're not going to check what you're doing.
Yeah. And I think this is one reason inference is a little bit more easy to stomach, because it's like, okay, well, it's not, the value is not actually in the persistent perpetual data, right? Like in training, I'm like making this data set of the weights, and then it has to continue to live forever. The value is not in the making of it. The value is just the just-in-time compute that is, my chain doesn't want to do.
I mean, how do you think about remote inference versus edge compute though? Like the other trend has obviously been that like these open source models getting really good and just running locally on your device. And it just seems like that's going to continue.
I think the client side split stuff of like, I have a big model that it gives enough of a hint to a small model so the small model can run locally. That's definitely going to be a big deal, but I still think it's going to be higher compute than like most blockchains. Like, I think blockchains are still going to have trouble running those.
I suspect where blockchains are going to thrive is the places where there is real censorship. And I think that also looks pretty ugly at scale or like at equilibrium, right? Where like, I think like the, the porn models, the unlicensed models, I think that's probably where decentralized inference networks are going to really have a big advantage. I just don't know how big those are going to be at scale. And relative to all the
for sure. But I just feel like it's much more believable they can exist versus the training ones. It's like,
I definitely agree with.
Because it's not even that. Like, if someone censors in training, I don't even have a very good way of verifying it. At least in the inference, I've fixed all the inputs, and it's really only about the execution.
Right. Yeah, I think the reality is that open source AI and homebrew AI are huge, and they're going to remain huge. And anybody who's like, I think people are conflating the two, and they're saying, oh, if you're long open source and homebrew, you should be long.
So I have a thought experiment I always think about with this stuff, which is if you think about like 1989, like Linux and Windows were both kind of similar install base, maybe a little before 87 or something. And then obviously Windows had this huge burst and Linux was kind of slow, But then all of a sudden, all these like data center operators, like the rack spaces of the world, started realizing like, oh my God, 90% of our revenue is going to pay Microsoft licenses. We got to like lower that. And they kind of started having Linux. And then eventually, once the Web 2.0 companies, I guess, existed, then they started eating up all that space, and they needed just like tons of servers. And it became so much more cost effective that like Linux was sort of enshrined at data centers. But like, would you rather have invested in Rackspace or Google? Like, there's kind of this problem of like right now, everyone you can invest in is like closer to the data center operator, which totally could also be great investments. But they're not going to be as crazy outcomes.
Yeah, I mean that's absolutely right. Is that the application layer is being more or less ignored at the juncture of crypto AI right now? I think in many ways. So if you remember during the .com boom, Cisco was one of the highest performing companies because Cisco was more or less an index of the internet. And you didn't have to take a directional view on any particular application winning because people didn't know what the internet was going to look like.
But there was one Cisco.
There was one Cisco, and everyone knew Cisco.
45 Cisco tokens.
Yeah,
that's right.
Yes,
that is true. That is true. But I guess the way that I see it, like, yes, the network infrastructure is an easier bet to make because you don't have to take a view on what's going to win on the application side. But the other thing about it, which is also, again, what concerns me, is that it's less legible, right? If you see an application, you can see application metrics. If you see infrastructure, who knows? Maybe someday all descended inference and da-da-da-da-da. And so that is what concerns me about the fact that the bid is going all to these infrastructure companies.
I'm totally concerned by it too. I mean, the fact is there's not going to be one Cisco. There's 10 new ones of these every month. Right?
Yeah. And none of them have anything in terms of like a supply advantage or a moat
there's
or
way too many picks and shovels.
Right.
And there's not nearly enough people holding those picks and shovels.
Right.
And, I think it's too early, to know what any of the infrastructure, will be successful.
Right.
Most of it probably will be obsoleted by whatever comes out in a year anyway. The next company that gets founded. And second, there's not enough things building on the infrastructure. We're all just speculating on infrastructure is going to be important, period, full stop. So, and there's almost nothing else really to invest in at this moment.
And then there's Worldcoin, which at this point is more or less a meme.
Well, Worldcoin is the best crypto AI usage in the sense of like, I don't sort of like agree with it mainly because I think their token is so poorly designed. But I think they are objectively the only ones who are actually like generating running inference, generating a proof, posting it on chain, and using it as a
application layer.
It is really application.
What's the inference?
I mean, the scan stores a model that takes features of your.
That's just like an image hash, right? Like that's not inference.
No, but they actually they run models on the input to that.
They just proprietary models that they don't.
I mean, the reason they do all the ZKML stuff is because of this. Like they actually care about moving in that direction.
Wait, it's ZKML, but they're not revealing what the models are?
No. Well, that part I think is supposed to come at some point.
Okay, all right.
Orb 2 or whatever, because I'm pretty sure Orb 1 did not have this.
Yeah.
Okay.
No. Sorry.
Okay. This is a new thing. This is a new thing.
What I'm saying is like they're the only ones honestly working on an application where they're like dog fooding their own thing.
Right. But ironically, it's like opaque and there's hardware that only one hardware manufacturer can create that has all this software on there that nobody can actually verify because it's not open source.
But I mean, it's not that different than NVIDIA.
Well, no one's comparing them to NVIDIA, right? I mean, that they're
uniting these threads. There was actually Elon's been making these memes about closed AI.
Yeah.
Yes.
And there was a closed AI meme token that launched this morning.
Of course there is.
So yeah.
Of course.
I'm sad I don't invest in closed AI.
Yeah. I think okay, so maybe they're doing some ZK something somewhere. Somewhere in the bowels of their orbs.
I think they're actually really honestly in earnest trying to add it and use it to make their product better, to make the identity.
I know that I would put Worldcoin and Earnest in the same sentence.
I'm just saying, like, I think the ignore what the BD people are doing. Like, I'm just saying the developers at Worldcoin are actually
look. I know they have brilliant people on their research
who
totally agree.
Who I think are earnestly using this stuff. They're the only ones I think you can argue are earnestly.
Okay, but that's not
everyone
why.
else
That's not why Worldcoin has the
an
valuation
application
that
doesn't exist.
Right.
Correct. The reason Worldcoin has the valuation that it does is because it has the most microscopic float relative to the total supply imaginable.
Yeah. So like 1%.
This is where I was saying the token is the issue.
Yeah. Okay. So not only is there 1% float on a token that has almost no price discovery, but then second, what's been very clear is that it is kind of the Sam Altman meme coin. So when Sam Altman posts something, or when OpenAI Sora came out, the video model, the Worldcoin ripped, more or less. I mean, it's kind of self-conscious because you see traders on Twitter basically saying like, look, there's no way to invest in OpenAI except Microsoft, which owns too much other stuff. So the best way to get exposure to the Sam Altman meme is to buy Worldcoin. And so more or less, like, the market agrees that Worldcoin is the Sam Altman.
Yeah,
meme coin.
I'm just saying, I'm like ignoring all of that. Ignore the token.
Let's ignore all of that.
People are just bullish on
look.
revenues
As someone who
That's probably what it is.
who kind of was abhorrently never going to invest in it. I certainly have a lot of like other qualms about the go to market that they're doing.
Right.
But I will say that the things they're trying to do to actually they care about the verifiability component because they want to basically do transformations of like the images they're taking of say like the eye, and prove to you that they did those correctly for someone else to use without revealing things. And they actually have a real reason to do that.
Okay, yeah, maybe eventually that will be worthy of congratulations. But right now, like I said, like everything is closed source. They don't reveal anything.
I'm just saying, like, I can't think of anyone else who's a good application at all.
Well, that's the fundamental problem. Like, is that the ratio of infrastructure to application is like absurd.
Yeah. And right now, like, it's basically infrastructure that's crying out for an application, right? I mean, more or less, the core thing of Worldcoin is that it's an ID system. And nobody uses the ID system right now. They're just kind of airdropping it on people in the third world. There was a story. So apparently Worldcoin recently got banned in Spain. And I was reading, apparently some people, I think they were either in Spain or in LATAM, who were saying that apparently there are all these shops popping up that will create posters of your iris, like these really like awesome laminated posters you can put in your house and they do it for super cheap because they want to take your iris and then go get a Worldcoin airdrop. And they're basically clipping the spread on like whatever you pay them and then the value of the airdrop.
Wait, they take it to a foreign country?
No. They do it there and then they take the super close-up scan of your iris and then scan it in a Worldcoin orb without telling you.
Well, why do they need to go? Because like, aren't there operators of the orb and you have to put up some money to be an operator?
No, I'm sure they can bribe.
I think you could just buy. Yeah, exactly. I feel like that's the cheaper way of doing it.
Yeah. Well, but you need somebody's iris to actually get.
No. I get that, but I just meant like it seems cheaper than like just to like collude with one of the operators.
So what happens when a Spanish person who's gotten a high-res photo of their eye taken wants to sign up for Worldcoin in like 10 years?
Well, I'll say they're already registered.
Well, yeah, it'll say they're registered, but then also like they won't get an airdrop, right? So their airdrop is emptied out. So it's like kind of pre-hacking.
Right, pre-hacking. Yeah.
Pre-hacking, yeah. So anyway, it's, I don't know, weird situation. But I guess
again, I was ignoring all of the.
Yeah, but why would you ignore all of it? Like
I'm just saying from a technology standpoint, attested sensors.
You just did it for the tech.
Yes, but I don't want the fate. I don't want the fate of that guy who was in that meme.
All right. Anyway, so I think surveying the landscape of crypto AI, it does feel like right now, obviously a lot of hype. I think the possibility for some real substance, and we're seeing kind of these first.
Do you see any applications?
So we invested in one application, the sort of chatbot character AI type thing that I think is not public yet, so we can't reveal it. And we're looking at some other stuff. I think right now, like, look, I more or less assume that there's going to be a lot more interesting stuff within the next few years. I think this first gen is kind of just, very surface level. Like, okay, I see this Web 2 company. Let's make a Web 3 version.
Yeah, it does feel like the Uber on the blockchain.
Exactly. It feels very Uber on the blockchain stage for crypto AI. And I do think some of these things will exist, but it's a little bit like, I don't know, like storage, maybe a storage A. Where it's like, okay, this is a plausible business. It's not going to be the biggest business in the world. It's not going to take over Amazon S3 or even Glacier or anything, but it's a thing. It's a thing that has some demand.
Yeah, I always think about this like Gollum and like Schmidt and stuff, right? It's like, what is the actual verifiable compute that we want? It's like EVM verifiable compute. It's rollups. That was actually like the verifiable compute market. And then what do you want in terms of verifiable storage? It's fucking blobs. It's 4844. It's Ethereum. Like it's you're right. Like, people have the right idea, but it rhymes. It's not like a one-to-one copy. And so, I don't know what that looks like for AI. Maybe it's smart contracts querying models to get historical state. But
I just think the historical state thing makes a lot of sense, right? Because like right now, all these contracts are paying oracles a lot, in fees to give them basically aggregated
history,
right?
But it is kind of niche, right? Like I don't think that the amount of protocols that require that level of intelligence
for sure
is probably less than 20. I would guess, on Ethereum mainnet.
Yeah.
I mean, just think of like your addressable customer base
Yeah.
for Gauntlet.
I mean, it's probably more like 50 to 100, but yeah, it's not like
Okay, maybe 50.
It's not like thousands.
Yeah. But ultimately, like this will be a commodity service, right? So it's not
Yeah,
as though
I also
Aave
think,
is going
like
to
I
pay
said,
millions of dollars.
they have
a year
this
for that.
there's this adverse selection cost problem. So you kind of the part I would say that kneecaps the market is it needs to actually be used on not the most valuable thing. It has to be used on the thing that like the cost of certain attacks is like cheap enough that it
Well, it also potentially opens up the design surface by
Yeah.
and like 2 orders of magnitude, right?
Sure.
So like when you start to get to the idea that instead of needing the data on chain, or to be honest, even the calculation or compute on chain at all, you can suddenly design things that we don't really have yet, like in any DeFi protocol. Like theoretically, if the only thing that's on chain is the actual like store of value in the
and
assets
transfers.
themselves,
Yeah.
and everything else is off chain, but there's a verifiable process by which you know that the off chain system is working correctly, you could theoretically build almost infinitely complex, infinitely fast systems that just use the blockchain assets for settlement. And that's really cool. And I don't think anyone's really spent much time in this. Like,
I feel like the fully private DeFi type stuff, like the Penumbras of the world, they of course already do this, but there's overhead for that. So, but yeah, there's something in the middle that's like somewhat off-chain / private and somewhat public and like merging the, but I think like right now you're seeing kind of like all the, the bell curve meme, all the midwit ideas that are just like, oh, copy pasta X and like it'll work. And it's like, there's no like thinking a little bit about like why this might not work right now.
Right.
yeah.
There is something to kind of on the outskirts of AI that I know I've heard you talk about many times, which is, the importance of like attested data. So the White House recently announced, I think a couple of weeks ago, that they were going to start cryptographically signing all the content that they put out. So every speech, every video, every audio clip. And I think right now the White House is clearly ahead of the curve because I haven't seen this from most governments and certainly not from most companies, is just in an age where video models are rapidly getting better, and already we have synthetic audio that is fantastic.
Right. This is a great idea. They should be doing it.
Yeah, they should be doing this, right? And there's there's a way that you can
where do you post
timestamp
those?
where, exactly.
Yeah.
Where can we all post them in one common place?
Yeah.
So it does feel like there will be something along those lines at some point, but it is in some sense a coordination problem more than a technology problem, right? Like the cryptographically signing stuff and hosting it on, hosting where your keys are on your server or on your certificate. This problem has been solved for many, many years. The coordination problem is what's not solved. And I think it requires more than just like, hey, I made a blockchain for all attested data. It's more like, hey, you need somebody to actually create the Schelling point and the consensus, which requires a great founder and like a lot of work in order to make that convergence into a single platform. But there will be something like that.
I'm going to say the White House put an announcement that they hate memory unsafe.
I saw that. Yeah, sorry. Do you want to recount this?
Yeah, I don't. I mean, the White House just put an executive order about how not executive order, like a post about how like memory unsafe programming languages are the source of all hacks, and like we need memory safe programming languages. And of course, the crypto Rust developer community went crazy. But I think at the end of the day, the people in crypto are a little bit myopic of one fact, which is like, because crypto has to restart building everything from scratch, like you're building basically the operating system from scratch in like these virtual machines. You're building like all the libraries from scratch. You're fine using a programming language that's new. But 90% of the world is like too afraid to like jump, even like make those like little jumps. You see some little things, right? At like Microsoft or Google where they'll be like, oh, like our kernel team for our custom kernel on our data center is going to use Rust. It's like, okay, great. But like, I think it's going to take a while for the memory safe stuff to disperse. So I thought but it was like funny that they actually cared about that.
Very sweet. Because
it's like a lot of the other things they've done were kind of technologically incompetent, like the AI thing that was like
capping the model weight.
I mean, most of their crypto policy is also incompetent.
Yeah, so I was like shocked to read something that was like legible, but
it's like your dad took a CS class on the weekends and he's like, hey guys, I think it's time for talk to you guys about memory safety. Yeah. I heard from my professor that you guys shouldn't use C.
I mean, I just think like maybe you're right that this is how you pill the governments into to thinking about blockchains of like, oh, actually, this is just a way for us to store this, and we don't need to worry about any actors.
The biggest problem, though, is whatever chain they use, if it is one of the existing blockchains, the second that they post onto, let's just say, Ethereum or Solana or whatever the chain is, you just know the response from the community.
You think there's gonna be a Jeo Boden roll?
For sure.
Yeah, what's the meme coin for this?
Yeah,
good question. No, but you're probably right that it will immediately get filled with spam, and transaction fees will shoot through the roof, and there will be like all sorts of weird
people
shit.
try to DDoS like the next, authenticated message.
Yeah, that's why we can't have anything nice in this industry.
Like we can't have anything nice because you know that they're gonna like genuinely try to like have like a really good.
That's why it's probably going to be like an enterprise chain.
Right. Although theoretically they don't need any chain at all to cryptographically sign a message.
Don't tell them that.
No. They have to store. They have to have persistent storage somewhere. And the question,
exactly. And it needs to be decentralized.
No, they don't. So
fuck off. Unbelievable.
You don't need any.
Wow, this is the angriest Haseeb has ever gotten.
You don't need any storage at all of it.
No, that's absolutely not true. He's lying. You need a blockchain.
Okay.
Call us.
Blockchain mandatory. Yeah.
No. I mean, I get this idea that like, especially in ZK land, a lot of people are like, oh, we don't need the whole chain. We can just have this like storage. The problem is like the input. In order to verify, I still need some of the input, and I need some kind of agreement on some state. And it's like that's the stuff that's most likely to get censored. To your point, and I think in this case, a government might view itself as like no one can censor me, but I feel like for this type of stuff, especially given all the hacks and like how they're complaining about their inability to keep things safe, wouldn't they want the thing that's battle tested and is constantly being battle tested?
Hey, I think U.S. government should start an AVAX subnet. I'd say that's the solution to their problems.
Not financial advice.
Not financial. Well, to their government, that's just voting. That's not financial advice, right? Anyway, technically, we have a constitutional right to do that. Cool. Okay, so the other big story in the last week has been Uni token. So Uniswap recently had a governance proposal from the Uniswap Foundation that proposed to finally turn on the fee switch. So for those of you who don't know, Uniswap is an AMM. It's a biggest on-chain DEX, and Uniswap has never actually taken a fee. There is a fee on Uniswap, of course, but it goes to the people who are providing liquidity on Uniswap. The protocol itself, or Uni token or Uni DAO, gets nothing. So the assumption has more or less been that this is for regulatory reasons. Maybe this makes Uniswap a security. Maybe there's some other reason why they've been fighting this fight. And people assumed that the community was going to end up having to drive this, and the foundation was going to have to be hands off. And what we've seen is the opposite, which really took a lot of people by surprise, which is that the foundation was the one that proposed to turn on the fee switch. And now it seems like it's likely to pass with flying colors. Everybody's very excited about this. And all of DeFi has pumped with, Uni leading the pack, on this thought that, do they know something we don't know? Is there a reason why they think that now is the time that they can go in and turn on the fee switch without concerns about being targeted by the SEC or something or other? So first of all, DeFi founder, any alpha or anything? What do you think is driving this?
Here's my take, and I don't have any alpha. It's not really just turning on the fee switch. Actually, more than that, fee switch is one piece of this. The second piece, which I think is actually more important, is that the fees will be diverted to Uni stakers who not just stake, but also delegate their votes into the governance process. And so you have to assume that the ones who are actually delegating in governance is a significant subset of the overall token holders. And the idea is that the fee switch will be diverted into those who are staking and participating in governance. So, I don't know what percent of Unis delegated. I mean, as of today, whatever the number is, it will be higher in my expectation after this system is rolled out. But let's just assume that there's 20% of Uni tokens that are actually staked, that are not sitting on exchanges, sitting in cold storage, sitting, in a format that's not participating. I've seen estimates that the fee switch will lead to somewhere between $60 to $150 million of fees, given current prices, the current market. $60 to $150 million directed to maybe 20% of token holders per year is incredibly significant. And it transforms Uni, the protocol and the token, from something that the token today is used for votes, but those votes are really only on the treasury. Like, it doesn't seem that meaningful. It transforms it from something that's not that meaningful to one of the most important economic systems in crypto, period, where the fees are going to be more than most L1 blockchains, period, full stop. And it suddenly catapults Uni into a position where I think it'll be one of the most analyzed and most talked about systems, period. And it's,
Wait, is it not? Maybe I live
on
in
a day-to-day basis, not really. Like, besides us on a podcast, like, I don't think Uni gets that much discussion. I mean, even though the fees paid by users are significant, 100% of that is going to the liquidity providers.
Yeah.
And I think it like fundamentally takes Uni from being a quiet system to being like an incredibly loud one. And, I think the magnitude of this really can't be understated. And I think if it's done successfully, it will transform so many other projects. And, I think it's like the beginning chapter of, what does DeFi look like, when it's sort of unleashed.
I that feels a little bit too broad because most DeFi protocols do have revenue. Like Uni is kind of an exception in that it had no revenue for so long.
I mean, most don't.
I mean, if you talk about like what's going into the DAO, like Aave does, Compound does.
Compound doesn't.
Compound doesn't?
No.
Isn't there money going into the insurance fund?
It's an insurance fund, but it's not being like paid out to like stake.
True, but it's kind of like, it's like
controlled by token holders.
It's controlled by token holders at the end of the day,
Yeah.
right? So like it does seem to me that Uni was kind of unique. It sort of feels like maybe the Saudi Aramco moment where it's not so much that there have been no oil companies. It's more like the scale of this DeFi protocol has never actually been absorbed by markets. And that is, I think, what's revitalizing things is just realizing like, oh shit, that's a lot of money at scale that can be made by token holders. I don't know, Tom, what's your take?
I think maybe I might be wrong on this. I think the governance proposal is basically just to switch the owner of the factory contract over to token holders versus just having it be sort of deployed as is. So the current proposal does not turn on the fee switch, but it allows token holders to add fees to new pools in the future if they want to do that.
I thought they were turning on fees for a select number of pools.
So it's they outline like the sort of potential fee schedule, but I think the current sort of snapshot that's up is just like a temp check on shifting the owner of the factory contract over to like token holders, basically.
I see.
So
it's a multi-step process.
Yeah, which again, from a regulatory perspective, also probably makes sense, right? It's not the team turning on a fee switch; it's token holders, who are staking, voting to turn on a fee switch.
Right.
I heard there was a conspiracy theory maybe a week or two ago that like secretly Coinbase, had won or was winning its case against the SEC, and so that was sort of driving up both the price of coin and sort of allowing Uni to go and do this thing. I don't really know how credible that is. It seems kind of conspiracy theory-ish, but I thought it was kind of interesting. And yeah, I mean, it's like you said. I think in terms of market re-rating, it's not just Uni that has been ripping, right? It's like every DeFi token that's in a similar position of, hey, we have some fee switch, or maybe it's we have some revenue that's going to a treasury or going to an insurance fund or something like that, and basically opening up the possibility that those might go to token holders in the future instead. So yeah, I just feel like maybe it is the market maturing and sort of thinking about how to rate and price these assets.
Yeah. Any of you?
I mean, we did a lot of the fee analysis for the foundation for this, so I've spent a lot of time looking through which pools I want to do and how to think about this. I will say there's a lot of careful consideration over at least a year plus. And I don't think they're doing this randomly in the way that maybe the conspiracy theories suggest.
Anything more you can share, or are you going to be enigmatic?
I'll leave it at that. Probably better.
Okay. So we have one insider who can't share too much, unfortunately.
I mean, hey, read the post. I read our report.
Yeah. No, I'm sure there are very good, sound economic reasons for choosing the pools you did. It does seem like the market is more or less pricing in that the regulatory environment is shifting, or at least the winds are shifting, right? So obviously the SEC is expected to continue to be obstructionist, but I think the whole industry feels like it has more ammunition. And in some sense, it feels like Uni is kind of the battering ram that everybody else can kind of get behind and say, okay, well, if Uni is doing this, we're probably good because they're going to go after Uni because they're kind of the biggest, baddest guy on the block. And so I suspect that's a little bit of the energy in DeFi right now that's buoying all these tokens. And And if they go after Uni, which, we know that Uni's had run-ins with the CFTC at least, and, the SEC almost certainly has chatted with them, that there's going to be a showdown at some point with respect to DeFi in the US. So assuming that the SEC gets around to it and they don't end up, churning out after, if there's a handoff in the administration. So we'll see. Right now, I think we got to wrap because we're getting up on time, but it's a wild market. My guess is that probably by this time next week, all-time highs in Bitcoin at least.
We've already hit
dollar
all-time
terms.
high.
We touched all-time high very, very briefly.
Listen, when
and then
CoinDesk
retreated.
has the headline and Bloomberg has the headline.
Yeah, Bloomberg
That's
and
true.
Wall Street
Yeah,
Journal
yeah.
posted a
It is
thing
not
Both
right
posted
after.
it. Yeah, no.
It is not in dispute that we have hit the all-time high.
We've hit the all-time high, but
I
we haven't
guess the
specifically-
real question is, when do you think ETH all-time high?
I think it takes more time.
At this rate, it's like we're days to weeks away. At the speed
But that's what
You think
I'm
days to
asking
week-
for.
I think it
I'm
takes
asking for
longer. I
a
think
more
it takes longer.
precise prediction. Like, do you think by April?
Well, okay. So last Tuesday, 8 days ago, I was at a dinner and people were talking about, will Bitcoin hit an all-time high? I think Bitcoin was like 54,000. I said within 2 months, and I bet on it with a friend.
Oh, nice.
And, we were all shocked when that prediction came true 7 days later.
So are you willing to make the same?
Yeah, should we make another bet?
So my prior
on
bet
the
was,
air?
will it happen within 2 months? And it was even odds. I would bet anyone here that it happens for Ether within 2 months.
Within 2 months.
2 months is a lot. I was thinking
Halvening is what, a month and a half?
April.
I think the halvening is overrated in terms of.
Yeah, but I suspect what happens
It's like
is that
420,
Ether catches
right?
up.
It's actually
after the
it's
halving.
actually very
I
close.
need to go check options pricing on Deribit to get a sense of
Yeah,
what the market's pricing.
That's
yeah,
true.
see where the delta is.
Yeah.
Yeah. No, that's kind of cheating. It's against the spirit. It's against the spirit of it.
Yeah.
Yeah, I do
But
think
you
that.
probably can't use it because a bet like this is like a binary touch option versus an American.
Yeah, I was
option.
gonna say.
Sure.
So you can't even look at the.
Well, let me ask you this: when Ether hits all-time high, what do you expect the price of Bitcoin to be?
76,000.
76. Okay, which is more or less same ETH BTC ratio.
I
it
think
sounds
ETH
like
outpaces a little bit from here,
ETH outpaces a little bit. Okay,
but not dramatically.
I think that's probably right. That sounds right to me. Yeah, I think it'll be a while until ETH BTC hits the same level that it was in, but probably by the summer.
Yeah.
I think it probably catches up. So anyway, obviously we are not traders, and so we have
Yeah.
no idea what the fuck we're talking
We're
about.
all long-term private market investors.
Except you.
Because
You're the
we
meme.
don't
You're the
know.
meme coin trader. The rest of
I don't
us are
trade
long-term
coins.
investors. You were the one giving us the.
Most knowledgeable.
Yeah, you're the most knowledgeable about Jeo Boden and all this random
I
shit.
might be knowledgeable about it because I
Okay, I think you
I
have
hang
the
out on
oral
crypto
tradition,
Twitter.
right? Like,
Yeah.
sit us around the fire and tell us the story of Jeo
Back
Boden.
in the day,
Yeah,
Jeo
beautiful.
Boden.
Beautiful.
was
Okay,
created.
with that, I think we got to wrap. Thank you, everybody. We'll be back next week.